This recording will introduce you to some of the basic concepts of management accounting. We will look at what is management accounting. We'll take a brief look at professional ethics in accounting and then move on to some key costing terms and cost classification. So firstly, what is management accounting? Well, it is the sourcing, analysis, communication and use of decision-relevant financial and non-financial information to generate and preserve value for organisations. So what does that actually mean? Well, firstly, management accounting uses both financial information and non-financial information. And it will use that information to help an organisation in planning, making decisions and keeping control. So overall, management accounting is about planning, control and decision making. As a management accountant, you are concerned with providing information to managers and people inside an organisation. In that way, it differs to financial accounting because the main concern of financial accounting is to provide information to those outside of an organisation. So as a management accountant, you would be particularly concerned with costing. So how much does a product cost to produce? This is particularly important in setting selling prices. You'd be concerned with planning. So, for example, how many staff do you need to work in the factory? How much is that going to cost you? How many items are we planning to sell? How many items are we planning to produce? Planning links in closely with budgeting. You'd also be concerned with decision making. So for example, should you produce and sell a particular product? Should you cease the production of a product? Is it no longer profitable? Should you invest in a new building? Should you begin to try and sell overseas? And finally, control. After the planning, where you've maybe set some budgets, the control is looking at whether you actually achieve those budgets. So for example, you may have budgeted to sell 1,000 items a month. Did you actually sell 1,000 items a month? Did you sell more or less? If you sold less, why? What do you need to do about it? So it's keeping control of your costs and incomes. So we can really summarise management accounting into looking at costing and using those costings for planning, decision making and control. Now, how that compares to financial accounting can be seen within this table. So this makes a comparison of the main features of management accounting to financial accounting. So the first point that we have is external, yes or no? Well, management accounting, no. Management accounting is concerned with reporting within the organisation, whereas financial accounting is focusing on reporting outside of the organisation, whether it's the shareholders, the banks or the tax authority. Secondly, focusing on individual parts or segments of a business. Management accounting will do that. For example, you may be making a decision upon producing a particular product. You may be looking at the production department. You may be looking at the sales department. So just focusing on a particular aspect. Whereas a financial accountant is concerned on reporting on the performance of the entire business. Another aspect to consider is forward looking. As a management accountant, you're concerned with the future. You're planning, you're making decisions. You may use past information, but you're looking to the future. Whereas financial accounting is historic. You are reporting on what has already happened. So you're looking back. Now we've already identified that management accounting is related to planning and control, whereas your financial accounting is concerned with actually reporting on the situation of the organisation. What profit has it made? As we're looking at planning and control and decision making with management accounting, very often it will use non-financial information, whereas financial accounting is purely concerned with the financial information. So picking up the figures from the financial accounts, whether that be your sales, purchases, expenses. Now there is a legal requirement for a financial accountant, as there is a legal requirement to produce a set of annual accounts. However, as a management accountant, there is no legal requirement, but all organisations, if they want to survive, need to be undertaking planning, control and decision making. So there needs to be specific duties carried out by a management accountant. And finally, annual reporting. A detailed set of financial accounts must be prepared at least annually. However, management accounting can take place over any time period. You may, as a management accountant, produce some reports on a daily basis, a weekly basis, monthly basis, or they could be ad hoc, as and when required. Now, before we move on to look at some of the terms that you need to be familiar with in management accounting, I want to briefly mention professional ethics. Now, professional ethics applies whether you're looking at management accounting or financial accounting. And by professional ethics, we're talking about the moral principles or standards that govern the conduct of the members of that organisation. If you eventually choose to join a professional body, you will be expected to behave in a manner that observes their ethics. Now, the International Federation of Accountants have identified several principles that are important to the accounting profession. The first of these principles is integrity. And that means you need to be straightforward and honest. You need to demonstrate qualities of truthfulness and fairness, and without discrimination. So we have an example of acting with integrity. You've been asked to produce a report. You're still waiting for some of the figures, the deadline's approaching, a colleague suggests you just estimate some figures and don't tell anybody. Right? It's an integrity issue. You're not being honest or truthful if you do that. So the second principle is objectivity. So you should not allow bias, conflict of interest, or undue influence to affect any decisions you make. And again, this is easier to understand with an example. So here in this example we have a client who thanks you for the work you have done by offering you a week aboard his luxury boat. Should you accept? Right, so this is an objective interest. If you accept a week aboard his luxury boat, any future work that you do for this client could be affected. So it could affect your future professional and business judgments. The third principle, professional competence and due care. So you have a duty to maintain professional knowledge. So here, again, highlighted with an example, a relative is aware that you are an accounts trainee, and as such they ask for advice on reducing their tax liability. As a trainee accountant, you are not a tax expert. You therefore do not have the professional knowledge to advise your relative. So you would not be acting with professional competence, and therefore you should refuse that request. We have confidentiality. So members should respect the confidentiality of information that's acquired. So if you're working on a client's work, then you should ensure that any information you have about that client you do not disclose to a third party. And again, we have an example. So your friends plan to invest £10,000 in shares in a company for whom you are the accountant. So the friend asks you whether this company has plans to expand, because obviously an expansion would affect the share prices. This is confidential information. You cannot disclose that information to your friend. And we have, lastly, professional behaviour. So members should comply with relevant laws and regulations and avoid any action that discredits the profession. And the last principle then illustrated with an example. So during a Christmas party to which some clients have been invited, you have too much to drink and begin to criticise some of the clients very loudly. This obviously is not professional behaviour. So there's just a brief example of what are considered to be the most important principles, and all accountants need to remember that ethics is important, and you can look on any of the professional bodies' websites for further information. We're now going to move on and look at some of the terms and classifications that you need to be aware of as you start your studies of management accounting. Firstly, what do we mean by cost? So what is a cost? It is basically an amount of expenditure that you can attribute to a specific thing or activity. So the amount of expenditure on producing a garden bench, or the amount of expenditure on producing a laptop. That is the cost. We will also talk about cost units. So a cost unit is a unit of product or service for which a cost is computed. That basically means calculating how much it costs to produce one of your products. So for example, again, if you're producing a garden bench, that is your cost unit, and how much is it costing to produce that bench. As an alternative to cost units, you may be interested in cost centres. The definition of a cost centre is a production or service location, function, activity, or item of equipment for which costs are accumulated. Again, to explain that, if we're talking about a cost centre, if you just think of a function or a department within an organisation, so for example the sales department, what are the costs associated in operating that sales department? The sales department would be the cost centre. You may have a production department and you would want to know what are the costs involved there. The production department is the cost centre. Different organisations could break their business down into cost centres. Now, if we know how much it costs to produce individual products, so cost units, then that allows us to set the prices of those products, to negotiate with suppliers and identify areas for savings to be made. If we have a knowledge of the running costs of the business, so their overheads for particular departments, so in other words cost centres, then it helps us to control those costs and consequently help us ensure the business makes a profit. Depending upon the type of decision that we're making, we may classify costs either as nature, function, direct or indirect. And we're now going to look at what this actually means. If we are classifying our costs by nature, this means that we're looking at all the costs that are being incurred in relation to a particular product that we could be producing and deciding whether those costs are material costs, labour costs, or expenses. So material costs is the cost of the materials used in the product together with the cost of actually shipping them into the organisation. A labour cost are the costs of the wages and salaries and other employment related costs. And expenses are all other costs. So the rent, the electricity, the gas, the advertising, the telephone costs, all other costs that are incurred by an organisation. So with nature, we have three classifications. A cost is either a material cost, a labour cost, or an expense. It may be more useful to look at our costs and classify them by function. By function, we mean, is it a cost in relation to sales? Is it a cost in relation to production, finance, administration, or distribution, for example? So in other words, what we're looking at here are cost centres. So we're gathering together the costs depending upon which cost centre they relate to. Now these headings that I've just highlighted are simply examples. Different businesses could have different headings. And the third classification is to classify our costs depending upon whether they are direct or indirect. A direct cost is one that can be clearly identified with whatever we are trying to cost. And as such, direct costs could be a direct material cost, a direct labour cost, or a direct expense. So for example, if we were producing a garden bench, the materials that were used for that bench, so the wood and the varnish, would be direct cost. It would be a direct material cost because we can directly associate that wood with the bench. The staff that assembled the bench, so they cut the wood, they assembled it and then went on to varnish it, would be referred to as direct labour because they were directly involved in producing the bench. And finally, we have direct expenses. So these are expenses that are directly identified with the product. You will not come across many of these. The ones you are likely to see are a hire of piece of machinery, especially for the job, royalties, patent fees, consultancy fees. These are the most common direct expenses you're likely to come across. When we add together our direct material cost, our direct labour cost and the direct expense cost, this gives us what's known as the prime cost. All other costs that are incurred would be referred to as indirect costs. So that means that we've still incurred them, but we can't identify them with the product we are trying to cost. As such, they're often referred to as overheads. So we could have an indirect material cost. If you remember when we defined material costs, it can also include things like cleaning materials. Now, cleaning materials would not be used to produce the garden bench, so they would therefore be an indirect material cost. The organisation could employ admin staff, advertising staff, supervisors. They are all labour, but they weren't directly involved in producing the garden bench, and therefore they are classed as indirect labour. And then all our other expenses, other than the ones identified as being direct, would be indirect expenses. So the rent of the building you're operating from, the electricity, the utility bills, the communication bills would all be considered indirect expenses. Another way in which we can consider our indirect expenses is we might just choose to split them into whether they are related to production or non-production. So we have a summary. Costs, they could be direct, in which case they will be either a direct material, a direct labour, or a direct expense. Or they could be indirect. And if they're indirect, we could choose to classify them as a production cost or a non-production cost. And within that, we could choose to say whether they are an indirect material, an indirect labour, or an indirect expense. So that's given you a brief overview of what management accounting is about, and we've looked at some of the key costing terms and cost classification. So I hope that this recording has been of some benefit to you.